Good morning, everyone, and welcome to the earnings conference call for the third quarter of Valid. I'm Olavo Vaz, Head of IR and Treasury. Before we begin the presentation, I would like to make some important announcements. This event is being recorded, and all participants will be only watching the conference call during the broadcast. There's a simultaneous translation into English. The supporting slide and all material related in the third quarter are on our IR website. Shortly after the event, the replay will also be available on our website. Once the presentation is over, we'll begin the Q&A session. Questions can be sent now at any time during the broadcast. To send questions, access the platform's chat box. It's important to clarify that any statements that may be made during this conference call regarding the business prospects of the company, projections and operating and financial goals, constitute the beliefs and assumptions of our management, as well as information currently available to the company. Forward-looking statements are not guarantee of performance. They involve risks, uncertainties, and assumptions as they refer to future events and therefore depend on circumstances that may or may not occur. Investors should understand that general industry economic conditions and other operational factors may also affect the company's future and lead to results that differ materially from those expressed in such forward-looking statements. Today, here with me, we have the participation of our CEO, Ivan Murias, to whom I'll now give the floor. Ivan, good morning, and I wish you a good presentation. Good morning, Olavo, and good morning, everyone who is with us in this earnings conference call. As usual, I would like to start by thanking all of our more than 3,000 employees who day after day contribute so that we can deliver the results that will be presented here. On behalf of the entire executive board, we would like to thank you very much. Let's start with the highlights of the third quarter of 2023. We ended the quarter with revenue of 558 million reals, a growth of 13% compared to the same period in 2022 and 4% compared to the previous quarter. In all segments in which it operates, ID, Pay, and Mobile, Valid have renewed growth compared to the same quarter in 2022, with emphasis on the Pay segment with an increase of 25% year-on-year. Only in the Mobile segment, there was a reduction in sales compared to the second quarter of 2023. In year-to-date, we have 1.6 billion in sales, a growth of 16% on an annual basis, with all segments showing double-digit growth. In terms of EBITDA, we ended the quarter with 127 million, a growth of 9% year-on-year. The ID and Pay verticals had an EBITDA growth of 10% and 72% respectively. And in the Mobile vertical, we had a drop of 44% compared to the third quarter of 2023. Further on, we will detail the reasons for the variations that occurred. Year-to-date, the EBITDA reached 410 million, 23% above the 9 months of 2022. Our accumulated margin is 25.3%, an increase of 1.5 percentage points compared to year-to-date 2022. Now, speaking of net income, in the quarter, we reached the amount of 61 million with a margin of 11%, taking the year-to-date to 178 million, which also represents an 11% margin. The third quarter result was positively affected by around 9 million, non-recurring, due to the receipt of outstanding amounts in the ID vertical. It is worth remembering that at this same point in time in 2022, Valid had a loss of 300,000 reais. The increase in the net income is the result of three major components: improvement in EBITDA, improvement in financial earnings, and the discontinuation of operating lines with low or no profitability. Looking at the earnings per share, we had an EPS of 0.78 in the quarter, and in the year-to-date, it is 2.25. In the last meeting of Board of Directors held in October, the decided to distribute another round of interest on equity in the amount of 0.27 cents per share, which accounts for approximately 21.6 million. The interest on equity will be paid today, November 8. This year, the board has already decided to pay interest on equity on 65 cents per share, which represents 52 million, or approximately 29% of the income for the first 9 months of the year. We remain committed to maintaining sustainable margins in the medium and long term, while in parallel, we put more effort into working capital management and cash control. This quarter, our cash generated from operations reached 223 million, which accounts for 176% of the EBITDA in the quarter. Continuous efforts in all verticals to reduce accounts receivable, improve inventory levels, and payment terms with suppliers have proven effective. The strong generation of cash from operations led to another quarter of significant reduction in net debt. Valid today is a company with 0.2 times leverage and a comfortable cash position, in addition to high bankability when and if necessary. I will now give the floor to Olavo and return at the end for final remarks. Olavo, that's you now. Okay, let's talk about the financial results. Our revenue amounted to 558 million in the quarter, an increase of 13% compared to the same period in 2022. Our EBITDA grew 23%, reaching 127 million, which represents a margin of 22.7%. Year to date, we have a 16% increase in revenue, reaching 1.6 billion. Highlights include the 23% increase in the year-to-date EBITDA, an accumulated margin of 25.3%, representing an increase of 1.5 percentage points. As Ivan said, all of our business verticals contributed to revenue growth to a greater or lesser extent on a year-on-year basis, and soon I'll provide more details on their behavior. This slide is one of those that we presented in recent calls. Here we see the evolution of three important indicators: EBITDA, net income, and ROIC. After the period that combined the pandemic and restructuring that Valid went through, EBITDA and net income are currently at their highest historical levels. EBITDA is close to 540 million on a 12-month basis, and net income is almost reaching 200 million. In parallel, we have been working to increase our return, which can be seen in the ROIC indicator, which in September already points to a level above 20%, an increase of 2.6 percentage points compared to the end of 2022 and 9 percentage points compared to the end of 2021. Now coming to the details of each business vertical. I will start with Valid ID. We issued 7.5 million documents, a volume 1% above Q3 2022. This level represents a historic record for Valid in single quarter and was influenced by a favorable calendar in terms of working days and extended expiration of driver's licenses that expired during the pandemic. ID vertical showed a growth of 4% in revenue and 10% in EBITDA, with a margin of 30%. It's important to highlight in the Q3 we had billing tests billing of around 16 million. If we disregard this revenue from last year, the growth in percentage would have been even more significant. In 23, test billing took place in October, so accounting would take place in the Q4. Year to date, ID revenue reached 537 million, a growth of 15% compared to 9 months of 22. For EBITDA, year-to-date growth was 28%, reaching 176 million. Let's now move to Valid Pay, the vertical that was a highlight of the quarter. We had a growth both in revenue and EBITDA in the quarter, although with a volume similar to that achieved in 22. Sales in the Q3 amounted to 224 million, a growth of 26%. EBITDA reached 49 million, an increase of 72%. This is the highest EBITDA volume ever achieved by this vertical. In the 9 months, sales are up 25% and EBITDA is up 63%. I would like to highlight some margins achieved both in the quarter and year to date. we reached 21.8% in the third quarter and 21.5% in year-to-date, increases of more than 5 percentage points year-on-year. The earnings from Argentina have helped to offset the still reduced volume in Brazil. In the national scenario, we believe that the beginning of the interest rate cut process would increase the volume of cards in the medium-long term. In Argentina, we continue to carefully observe the current developments since the market is experiencing atypical situations that may undergo adjustments depending on electoral process. And now move to Valid Mobile. In the quarter, we presented a growth of 6% in sales and a reduction of 44% in the EBITDA with a margin of 13.7%. Year-to-date, we have an increase of 5% in sales, reaching 461 million, and a 13% drop in EBITDA at 100 million, with an accumulated margin of 21.7%. Mobile verticals saw volume growth of 20% in the quarter for a sales increase of 6%. As we indicated previously, it was expected that the global market would undergo volume and price adjustments, which happened this quarter. It is also worth remembering that before the pandemic, this vertical had operating margins between 15% and 20%. During the period in which there was a chip shortage, margins increased, reaching almost 30%. What lies ahead is a reduction in margins with a potential return of indicators to pre-pandemic levels. The operating result for the third quarter was around 14%, influenced by two factors in addition to the issue of volume and prices. First, some sales were postponed from third to the fourth quarter, and there was also worse sales mix when we consider geographies and profile of ships. We believe that at least until the first half of 2024, the results of this vertical will be more challenging, and the team is focused on the optimized allocation of ships in the countries in which we operate. The fact that the Valid has a good balance between verticals, geographies, and currencies helps the units to complement each other in the overall result. Let's now go through two views that show the path from EBITDA to net income in the quarter and first 9 months of the year. This quarter, we went from an EBITDA of 126 million to a net income of 61 million, which is an EPS of 78 cents. This is the third consecutive quarter in which Valid has net income of around 60 million. In year-to-date view, we went from an accumulated EBITDA of 411 million to a net income of 178 million, EPS of 225. At the same point in time in 2022, Valid had practically zero net income, and now we have an accumulated net income of 178 million. The progress achieved can be divided in three main groups: improvement of 76 million in EBITDA between the 2 years, improvement of 135 million in financial results, influenced by significant reduction in debt over the last quarters, and payment of loans that existed between Brazil and Spain, and 71 million increase in discontinued operations that harmed or added little value to the company's net income. We had an increase in taxes paid, which is natural, accounting the higher accounting results. For the next periods, even though we have potential negative pressures in value paid to Argentina and Mobile due to volume and prices, we remain hopeful regarding continuous improvement of financial results as the company is getting closer to the point of becoming cash liquid. On this slide, I present a view of cash movements during 2023. The year started with a cash of 513 million. We had operating cash generation of 380 million in the first 9 months, which represents 92% of EBITDA for the period. In this quarter that ended, the conversion of EBITDA to operating cash generation exceeded 170%, largely influenced by the improvement in working capital accounts. Until September, CapEx expenses totaled 57 million, and the negative financial result was 69 million, reaching cash after operations of 770 million. From then on, the result between funding and amortization is negative at 131 million. We paid 52 million in earnings, had a small exchange rate gain of 6 million, finally reaching the level of 190 million in cash and investments. This level represents around 97 days of net revenue, an increase of almost 30 days compared to the same indicator in the end of June. I'll now talk briefly about our liquidity. As mentioned earlier, we had 590 million at the end of the third quarter. In the second quarter, cash was 440 million, which is an important growth in the period. The increase in cash position led to a further reduction in Valid's leverage indicator, which ended the quarter at 0.23%, one of the lowest levels in history. Regarding the amortization schedule and the composition of current debts, information on the screen already takes into account recent extensions and prepayments made through Valid Spain in the beginning of October. Valid currently has a gross debt of 692 million, around 70% in Brazil and 30% in other geographies. Of the debts in Brazil, 52% refer to ninth issue of debentures. In terms of maturities, around 26% of Valid's debt matures in 2024, 36% in 25, and the remainder from 2026 onwards. The company's current cash position is sufficient to pay off all liabilities for the next 2 years, but still we remain attentive to potential market windows that could lead to an improvement in spreads, longer duration, and a better guarantee structure. Now analyzing Valid's share performance in 23. Until September, the stock had appreciated by 92%, which compares to 6% appreciation of Ibovespa in the period and a 6% devaluation of the small caps index. During the same period, Valid made 3 IOE payments, which totaled 64 cents per share, and today will pay another 27 cents per share. The average daily financial volume in the third quarter was almost 7 million reais, an increase of 25% compared to the previous quarter and 164% when compared to the third quarter of 22. Now I'll give the floor back to Ivan, and I will go back for the Q&A session, remembering that questions can be sent anytime via Zoom chat. Ivan, the floor is yours. Okay, as we did in the last earnings call, I will briefly look at some important events in the third quarter. In the second quarter, we announced the signing of a judicial settlement between Valid and Detran Rio de Janeiro. And now in August, within this quarter, we received payments of the amounts owed. We also had the ratification of 3 recent bidding processes in which Valid participated and won: Civil Police of the Federal District, ID Goiás, and driver's licenses in Mato Grosso do Sul. These are projects that involve increasing the scope of services, entering new geographies, and reinforce our operations in states we already operate. In our mobile vertical, we reached an important milestone, which is the implementation of the 100th subscription-managed platform involving telephone carriers around the world. We continue to actively seek more commercial opportunities in the different geographies we operate. It is worth highlighting the presence of our teams in some events that took place this quarter. The ID team was at the launch of platform Gov.Piauí in September this year. This is a state initiative that has placed itself as one of the most advanced positions on the digital government agenda in Brazil, and Valid is along with part of it with the state of Piauí as a provider of digital ID, authenticating citizen journeys in more than 50 public services available digitally. Still in ID, we announced last week strategic partnerships with Cybernetica. Cybernetica is the Estonian company that led to all the technological development responsible for making the country one of the most digitally advanced in the world. They have become global in the last 10 years and now have projects in several countries around the world, from Ukraine to Malaysia, from United States to Japan. Valid will be Cybernetica's exclusive partner for Brazil, with an intensive exchange of knowledge and technology transfer, and together we'll bring cutting-edge solutions to digital government, tested and approved for our customers in all areas. Finally, our mobile team was present in some important events for this year, and the highlights for the mobile conference led in Las Vegas this year. This is one of the most important events relating for the segment to lead the panel. And once again, we were able to present the solutions that Valid has for its partners. In my final highlights, I would like to reinforce that our commitment to the whole team of not only looking at customers, but also best opportunities for management. In maintenance, the dynamic of our payment of ROE on a half-year basis and dividends. And finally, our active agenda, been looking for organic opportunities through our M&A team for acquisitions that strengthen Valid's portfolio. As the agenda advances, we'll share the news with you. I will now ask you for 2 minutes while we organize the Q&A. Okay, we're back, and let's start the Q&A session. Here with us, we have Ivan and Wilson Bressan. I remind you that the questions should be asked on the platform chat, and we'll organize them. Starting with the first question that comes from Mauricio, and it's for you, Bressan. Congratulations on the results. And you mentioned some ratification of recent results and some involved in increase in scope. Do they have already services in digital government? Could you give us an update on that? Thank you, Olavo. Good morning, Mauricio and everyone. We have talked recently about some projects we have implemented lately with an increase in scope, either in Detran Rio Grande do Sul or the digital counter in Ceará or Gov Piauí platform. But we have been on track, and we are happy to announce a new agreement. We've been adjudicated and ratified with the government of Ceará state in a competitive process within ITIS, which is the technology company of Ceará, and we can now announce our full services agreement for digital government. It's been published on the official Gazette on Monday, and the scope of services that we'll provide according to the contract, we'll be able to sign the agreement next week, mapping and development of digital journeys to bring the services closer to the citizens of Ceará state. There is a platform for interoperability. We'll be able to use the Cybernetica technology. We'll provide the platform that integrates the database for the several secretariats of the state of Ceará, and that will allow us to unification of the services provided by the government of Ceará. So this ITC contract is different. It's the first time we have a full contract to provide all services for the digital government for a full state, which is different from being what we do in Piauí, being authenticator. But for Ceará, we'll provide the full service of digital journals and interoperability with cloud services. This contract is a bit different because we have a contract with ITC. which is the technology company. So we provide the digitization and digital government service to ITC, and ITC can also sell the technologies and services to other states in Brazil. So we'll keep you updated about that in the next calls, because there will be development regarding the profile to each contract that will be related to this umbrella agreement that we signed with the government of Ceará. So on the Investors Day, we look for inspiration in other countries, as we said, to open a new avenue for revenues. And less than 1 year later, we're able to announce a full agreement that will allow us to exercise this new avenue of services very well. So this is evolving pretty well. Thank you, Bressan. The next question comes from Eduardo. It's for you, Ivan. Congratulations on another sequence of good results. We see the name of the new CFO. Could you give us more details about his arrival? Good morning, Eduardo. Thank you for your question. Rafa Zig has been with us since the beginning of September, so the onboarding and integration process is very detailed and deep. In October, he's shared a bit of his onboarding with the end of his education in Harvard, and since November 1st has been fully with us. Our commitment with Rafael Ziggiatti is to help him in the onboarding process until now, and as of now, he will be a full member of our team. The other members of the team will continue with us and will remain available for market investors. Lu, Walter, Olavo, they are with us here in the studio, and they will remain even more important. But Rafael will be with us from now on, and he's very welcome. Thank you, Ivan. There are two questions from Thales. The first for Bressan, and the next one to you. Bressan, could we expect worse results for ID in the fourth quarter due to the end of the extended term for emissions after COVID, which was valid until August this year? Thank you, Thales. The fourth quarter has a seasonality that causes the volume of documents to be lower than in the other quarters, naturally. This has a lot to do with the number of working days and holidays. So we can expect a somewhat reduction of volumes, especially in the driver's license, CNH, because we had the period to renew them until August. But on the other hand, there's a major effort that's being made by the Institute and by us in the agreements we have with the identification institutes, because the new SIN is now a reality. So we have an extended period for the new for the states to issue the new SIN, but in coming months, many states will be able to issue them. So in addition to this drop of CNH, but increase in the new ID card, but increase in scope of other items with the digital government, we expect this drop to be small and not significant regarding the results of this quarter in the ID vertical. Thank you, Bressan. Second question, Ivan, from Thales, when we expect the normalization of exceptional results of Argentina in pay? Well, Thales, this is a difficult question to answer in a precise way, but this is a topic we are really keeping a close eye on, and we'll continue to do that. Number two, the electoral process and the second round of elections will be defined very shortly. But one of the things we estimate, and it's actually an estimate, we cannot have an accurate answer, is that once the government from Argentina has made a strong intervention in exchange market, it had extended the term to for the settlement of cross-border transactions. And though whatever the person that wins the election, they should take some time to have this 180 days period. So we don't believe that in the first quarter, next quarter or first quarter, there will be a drastic change in our volume of business in that geography. Even so, we'll continue to follow up on that. And something that should be observed is at the end of the first half of next year as an important landmark. Okay, thank you, Ivan. I would like to remind you that you please send the questions on the chat of Zoom. We have 3 questions from Fabio Giobbi. Congratulations again for the resilient results in the quarter. Without giving guidance, could you please inform what are the expectations for the fourth quarter and the first half of 24? Thank you, Fabio. As you said, we do not give guidance, but Bressan has mentioned some elements. In ID vertical, we may have lower volume due to lesser working days, as well as of the education tests that we bill and account for in this fourth quarter. And the dynamic, there's no change in Argentina and Brazil. In margin, we should expect an increase in mobile because the third quarter was more challenging. In the fourth quarter, we expect it to be a bit better. So in margins in general, we see a fourth quarter in line. We have an idea of what's going on at the end of October and what's going on in November. For the first half of 2024, I prefer to wait a bit to observe the price dynamic of chips because the company has been vocal in that, to wait on the electoral result of the elections in Argentina. And I believe that this backlog of the pandemic has been used up, and now we'll have new volumes and new contracts in that area. Okay, thank you, Ivan. The next question from Fabio. He's asking if, due to the situation, financial situation and the electoral process in Argentina, does Valid study a possible sale of assets in that country? Well, we keep a close eye on what's going on in Argentina. It's difficult to say what will happen in the short and medium term there. Assets in Argentina, when this new team of management joined the company, we analyzed the possibility of selling it. Back then, there was a unit that had a negative or even zero earnings. From then on, not having advanced on sale was good because we're able to reap the fruit. And right now, the possibility has not crossed our minds because the M&A's market in Argentina is not working at full speed for companies that are working well, which is our case. What we see there is divestments of companies that gave up on the country or those who have negative or very low margins. And right now, we are okay with the operations. We are keeping an eye for possible changes and variations, but right now, we are not considering divestment in Argentina. And just adding to that, Olavo, if you allow me, I think that the sales team in Argentina has done an excellent work, and not only in terms of the geography, currency, we're paying attention on accounting and financial aspects, but our local team, sales and operations is very attentive to that dynamics, and they're doing a great job. So I think it's important to wait and see carefully. We're very pleased with the work they're doing down there with the team delivery, and we will continue with that for longer. The third question from Fabio is asking, does Valid expect to be cash liquid until this quarter? If so, do you find it interesting? Fabio, this is the moment of cash liquid, is the end of 2023, beginning of 24, keeping things as they are. As for being in that situation, I would like to refer to what was said in the last Investors Day. 3 parts: paying shareholders, looking at opportunities that may appear for growth, either organically or inorganically, and the third part that will be allocated between these two. This is a discussion that will happen at the board or shareholders meetings. We continue to look at the debt market to extend terms on duration, improve duration. What we're doing right now is to improve our rating even more, because that helps with the spreads of the debts we have already. And we must remember that although Brazil has started to cut its interest rates, the benchmark is still very high. So we're not talking about debts of 2-3% interest as we did in the past. Now we're talking about 14-15. But we have looked around. We're talking about opportunities. We have made payments on interest on equity on a quarterly basis. Today we made another one. But we're paying attention to any opportunities and improvements to have a lower capital cost. Now, moving on to the next question from João Carlos from Ivory Capital. Does Valid look for organic growth only, or is it looking for an M&A? João, I think we have done a bit of that. As Olavo said now, this dynamic of 1/3, 1/3, 1/3. 1/3 refers to growth, and there is an organic and inorganic part that is already predefined there. We have a CapEx destination of our recurring earnings that is already making this future growth feasible, especially in mobile units and a bit in ID. All ICIM and platform requires investments that are already taking place. So this organic part is in progress. The inorganic part can change these 1/3. We have made some initiatives regarding that. We had a Vsoft, the deal with Flexdoc more recently, and we're paying close attention to the capital market, the private capital market, to see if there's any opportunity. This much makes sense to shareholders, either in terms of exchange or purchases using Valid share as for swap. That must make sense. So we don't see companies that have margins that could allow businesses deals that make sense. But for me, now Zig coming, Olavo, myself, Bressan, we are paying attention. We're talking C2K with important points of the market, but it will only take place if it makes sense for us. Thank you, Ivan. A question that comes from Alexandre from Sumauma Capital. Good morning. Congratulations on your results. On the explanatory notes, there is a notice about the possible sale of manufacturing units in November 23. Could you give more detail on that? There's not much news here, Alexandre. The plants of Caju and São Bernardo. These are long processes. We're talking about real estate that have been with Valid for a long time. And when we start the sales process, that involves players that will change the type of use. So we have approval of projects with the City Hall, with the real estate registry. So as for São Bernardo, we are at the final stages. There we see a quite concrete possibility of closing it still in 2023. As for Caju unit, we may slip into 2024. These two properties together account for around 15 to 20 million reals for the company. Another question from Daniel Gouveia from Arturus. What is the payout for 2023? With the company deleverage, could we expect more than 25%? I will start the answer if you want to comment on that. Daniel, so far we have made 30%. With the payment we're making today, that's where we stand. That's slightly above 25. Something in addition to that will depend on what I said previously. That's a discussion that will be taken at the board of directors, at the shareholders meetings. If we don't see any opportunity to use part of such funds for M&A or any other front, eventually one of the ways would be to pay more to shareholders. But we are already above 25%. Yeah, there's the tax deductibility. We're looking at this issue of interest on equity, how it evolves. So we're paying close attention to any possibility to improve this tax deductibility, and that makes sense for the company. Given the dynamic, more than that, that will depend on the one-third dynamic and the conversations with the board. The next question is from Pedro from Alpha. For you, Ivan. Good morning. Congratulations on the great results. Going into mobile, thinking about better volumes year on year, but lower financial results year on year, I believe that is due to a lower average ticket. What was that due? How do you imagine that dynamic for 2024 with the production with partners, production of ships? Would that be similar to pre-pandemic levels? Pedro, I believe there are two dimensions here that are worth being separated. There's one dimension that's more structural, related to the dynamics pre-pandemic, shortage of semiconductors before that, and that business at the pre-pandemic levels had a margin level of 12 to 14% that went up to 25% that we ended last year, and this year will close to 22, 23% in terms of margin, already expecting a fourth quarter better than the third. This is a structural dynamic, and it is related to these aspects that you mentioned. As we have more ships available, the price will drop, the margin will not stay at the level of 25%, although this year will be close to last year, but in the margin that will drop. That's part of the dynamic. On the other hand, we don't expect margins to go back to pre-pandemic levels. It should stabilize at some point in between. But we remain confident on a healthy business and on the transformation itself. The company has been very vocal about that. So prices will likely go down and the margin will also drop, but we observe that. But this is different to what happened in the third quarter in particular. In the third quarter, we still see some geographies with inventory levels that were accumulated, and they took longer to go to purchase again. We didn't make high sales, which is in the price mix, has a higher weight on volume and pulling margins up. We sold to the Southeast Asia, Western countries, and Africa. They have lower margins. So therefore, in the third quarter, we saw a lagging margin. However, on the other hand, we didn't sell to geographies such as United States, in which our margin is better, and that should return to regular levels in the fourth quarter. That's why we are optimistic that the third quarter does not reflect what we expect for the remainder of this business. So that should give you an idea of how the mobile vertical should behave between these two extremes from now on. We now have the last question. I would like to thank you again, Bressan, Ivan, and everyone that's here with us, and the entire investor relations team, officers, and are available for